Hi, everybody. I hope you're doing well. Today, we're going to cover prep2grow's 4-month stock and stock option recommendation performance. This covers the period of June 1st to October 5th, 2020. Let's just jump straight into it. Over the last 4 months, we've provided 88 stock and stock option recommendations. 77 of them have returned the minimum targeted gain. For options, that minimum gain is a 15%. For stocks, that minimum gain is 5%. In essence, if a stock or option hits that gain, we will send out an alert to our subscribers. Just note that these numbers don't cover our active traders subscription. Active traders receive daily recommendations, and on average, they receive about 16 recommendations a day. And any given week, we're talking 80 to 100 plus recommendations. So we don't cover that as part of this. Also, active traders take our recommendations and make them their own and apply them to their own trading strategies. So for the subscriptions that we do cover, which are the vast majority of them, it applies to what our trading strategy is for our primary subscribers. Let's break it down month over month. June, July, and August, we've achieved so far greater than 90% accuracy on our recommendations. For September, it's 77%. September just ended, so we're still expecting some to come in throughout October. In October, we've already made 2 rounds of recommendations. We're already at 87.5%. Again, on average, we're 87.5% recommendation to date, even with 11 trades outstanding. Our primary metric for subscribers is if they bought 1 share or contract per recommendation. That's really what it sounds like. If you got a recommendation, if you buy 1 contract or 1 share, what would the return look like? To date, if you had done that, you would have returned $12,725 in the aggregate. Per trade, and on average, that's $165 per trade, or 25% gain per trade. And that occurs within, again, on average, within 6 days. Let's bucket up those gains a little bit so you have just an understanding of where they fall into it. We don't simply just sell at a 15%. We do recommend that you sell, just based on the history and how stocks fluctuate so much, especially right now with all the volatility. Stock options, that is. And for stocks, again, our minimum gain threshold is 5%. So if we look at the buckets, 5 to 10% returns make up 25% of our trades, and that's primarily stocks. We don't sell options again or recommend selling for less than 15%. So as we get into the 11 to 20% bucket, 53% of our trades fall within that category. That's a mix of stocks and options. Greater than that, or 21% or more return, are primarily options, and that makes up about 22-23% of our total trades. So let's just give you an understanding of how high we kind of go up to. When we go to 30% above, we've had some that returned well north of 200% return. So primarily, again, our main strategy is to deliver continuous gains and not continuous losses. And so the strategy really is geared for that. Let's talk about the time to gain. 60% of our trades take less than 10 days to make the return. Again, on average, it's 6 days. The reason why we have long expiration dates is because of the long tail that we do have. About 23% take longer than 21 days. So we predict company performance, which in returns has a direct correlation to stock price. And so we have long expiration dates because sometimes that performance takes a little while to get reflected into the stock or to come out as an announcement. So we may predict a layoff, or we may predict an acquisition, or we may predict they're just going to miss the quarter. So it may take a little while, and that's why we have the long expirations. The goal around the long expiration is, one, to cover the performance and have it reflect in the stock price. And the second is for options specifically, so that you don't fight time decay, right? So the only thing we were trying to get you to fight is just when is the performance going to impact the stock. And so that's why I have long expiration dates for options. You can pull it in, certainly to a closer expiration date. And if you look at other videos, it talks through how you go about doing that. So let's talk about the recommendation types. So 33% are stocks, 67% are options between puts and calls. The other recommendation type is just the unique companies we provide. So 81% of the recommendations we made were only recommended once. 19% of them were recommended more than once. And typically when we recommend buying a company more than once, it's because we're following an upward trajectory, or we followed an upward trajectory and we're predicting that it's going to end and they're going to decline. And that's why we'll recommend it more than once. We cover 2,000 total companies. And again, on a daily basis, we make 16 on average recommendations. So there's a large variety that we can provide. And we track it across sectors. So we're going to start to include what sectors each of our recommendations for. To date, it spans 7 sectors. So sectors are high tech, consumer, retail, banking, real estate, etc. So this covers our performance. Let's dig into what's going to happen in November. So we're very excited about this. So we're moving our platform from a Tableau-driven kind of front end. We've spent all of our time on our big data AI platform, and now we're just going to have a more consumer friendly front end. So a fully redesigned website, you'll be able to go in, it's real time, you'll be able to action it, you'll be able to track stuff, you'll be able to see updates in real time. The other things that we're very excited about is we'll finally get to true personalization. So personalization today occurs when you fill out those surveys. We help level out the subscriptions. And so for some subscriptions, the vast majority of folks in the subscriptions like a lower cost trade. And so we recommend that the majority of the time. For active traders, it's unlimited. And so you may get a lot of recommendations in a day. On Monday of this week, or October 12th, we provided 31 recommendations. So it's a little overwhelming. So the personalization allows you to determine what you want, what's your preferences, how much risk you're worrying to, how many trades do you want to do per week, what's your return and what's your cost. So all these things will drive the recommendations that we give you in any given day. So it'd be truly personalized to you and your preferences. The other thing we're super excited about is the auto trading. So we partner with a third party to do auto trading. And so if you want to set up an account with them, we will take your personalized recommendations and feed it to them for trading, right? These are recommendations and they'll be able to do the transactional execution for them on your behalf, and if you allow them to. The other thing we're going to start to have is more of a social experience around this. Very light at first, just around how many people are looking at a recommendation and did they buy it or did they like it. So just kind of sharing that information so folks can start to see how popular things are or not. We're very excited about this. This is our first phase of our fully redesigned, more consumer-centric front end, which hopefully will make folks happier about the real-time nature of it, the true personalization, and be able to auto trade. So we're excited about that. We have many other things planned out post-November, going into December and the new year. But this really starts the transformation of our website and turning it into a more application or consumer-grade application. I appreciate your time and hope you have a great day and happy trading.